Hi, I found something new that looks very promising, so I wanted to share this. This is soybean oil, symbol ZL, March soybean oil futures. So this looks very bullish, and I got in it, and let me go over why I got in it. So these are my notes. So let's see. So swing, higher swing low. So see this low here, this is a swing low. And then it went up, came back down, looks like it's starting to go back up. So this is another swing low. And this low is higher than this low. So that in itself is bullish. Also, this thick white line that's coming across here, that's the 200-day simple moving average. And you can see that second swing low came down, exactly touched it, and bounced right off of it. And here we came down with a lot of force. We kind of penetrated it a little bit, but then respected it, came back up. So that's serving as support. So you got the 200-day simple moving average providing support. So that's bullish. Also, you see these thin angled white lines. So I drew these in to represent what may be a channel to the upside. So the bottom line connects to the bottom of this candle at that swing low and the bottom of this candle at the second swing low, connected those. And then I made a copy of this line and just put it here, which connects the top of the bodies. See, now also hit the top of this and came close to the top of this. So that is a possible likely top of the channel. But this is the more likely, and this is the normal way that you draw the channel, is I make a copy of this, and this goes on top of the highest high, excuse me, which is the top of this candle right here. So I just draw them both in, why not? And one of them will be the top of the channel. So if this is forming an up channel, like I drew, if that turns out to be true, that's another bullish indication that we're heading up. Another thing is possible head and shoulders. So you see the purple? So see price comes down here, comes up a little bit, comes down, forms a swing low, comes up, swings back down, forms a second swing low, and now it looks like we're starting up again, right? So this pattern, if this completes, if this continues up and breaks through this, which is called a neckline, then this pattern illustrated with the purple lines is called a head, well, this one's an inverted head and shoulders. So this is the left shoulder, this is the right shoulder, which makes this the left armpit and this the right armpit. And what you do is you connect the armpits, and that creates what's called the neckline. And then to get an idea where this is going to go, you drop a vertical from the neckline down to the top of the head, and then you copy this and you set the bottom of it onto the neckline at the breakout point. So we haven't, so this is the current day candle, so we haven't broken through this yet to the upside. So I haven't made a copy and put it up there. But if I did, you could see it would clearly get this far from here to here, which is my target, which I'll talk about in a minute. All right, so that's the head and shoulders. That's another potential bullish indication. And then there's an A, B, C, D. So what I did is, see this yellow line, I drew it from this low point here to this high point here. And then I made a copy of it, and I put the bottom of it at the bottom of this swing low, which is a projection of where price may go. And it comes right up to the channel top. And right now we're down here. So if it follows this ABCD pattern, it's very bullish because it's going to bring it up to about here. Another bullish indication, you see this white angled downward trend line connecting the top of these candles. So today we broke through it. We opened outside it, we came down and retested it. That's what this wick is. We came down and retested it and then headed back up. And you can see it's a green candle with a very small wick on top, which is an indication it's a strong candle. And we're on the other side of that trend line, so that's a bullish sign also. And then the final thing I noticed, it's called a bullish harami. That's where you have this down candle, and then the next candle is green and inside the body. the close of this candle is equal to the open of this candle. So these are at the same level, the same price, which means that this body is inside this body, which is a bullish harami, which is a candle pattern or candle signal that is bullish. So it's quite a few different indications to be bullish and certainly worth the risk to me. So what I did is I got in today at, let me look on my log here. So I got in at $30.94, which is right there, very close to the close. So I got in here, and another thing too is you see this orange wavy line. That's called the 8 exponential moving average, or the 8 EMA. That's not even on my list, but we closed a little bit above that. In fact, if I zoom in, since it's a video, I can just zoom in. So you see the top of the green candle here? It's higher than the 8 EMA here. We closed above it, which is a very bullish sign and a requirement in my rules to get in on the long side. All right, so that's that. Also, down here is another candle pattern I didn't put on my list, but this is called a morning star. And our stochastics down here is just below the 20 level, so we're still in the oversold area. So we got a morning star. These three candles here form a morning star, with the stochastic still a bit oversold, which is another very bullish indication. So there's even more than what I wrote on my list. Okay, so now let me show you this unbelievable target. So the target is a bunch of things that are all coming together in the same place. So I wrote 50% FIP. So let me expand this out a little bit. All right, so this was a swing high back on January 2nd, and this is the swing low just recently on February 3rd. So I drew the Fibonacci levels that cover this range. So this is 0 at the bottom, 100% at the top, which puts 50% right here. So that is a very typical retracement levels, 50%. Sometimes it only gets to the 38.2 if this was a very strong downtrend, and sometimes it gets to the 61.8. But the most common level I see price retrace to is the 50% level. So that I would pick that target anyway, even if there wasn't anything else coincident with it. But where do you see this? So the next thing is the 50-day moving average. This red wavy line, that is the 50-day simple moving average. It's very flat here, and it's following exactly along at the 50% retracement level, which is amazing. So you got the 50-day simple moving average aligned with the 50% Fibonacci retracement, so that adds some credibility to that level as a target. And another thing is it's right at the channel top. So I estimate price will get to the target right about here, and this upper trend line of the channel also is going to hit that level right about that time. So there's another reason that makes that a good target. And then finally the ABCD, the yellow lines, this down here and then that same distance repeated up here, that's not exactly added, but it's pretty darn close, certainly close enough. So this level right here, 3274, is an excellent target level. So that's my target. See, bullish move to 3274. And let's see what else. I think that's it. Well, the risk reward. So my stop, see it says stop is at 32.25. So that is just under the 200-day moving average and the bottom of this swing low. If we're right and this is bullish, this should continue up. This should not turn around and come back down. If it does and it hits this, it's, relatively speaking, hardly any risk at all. The stop loss is 30 and a quarter. My entry was 30.94, so it's roughly like 70 cents risk, and the possible gain let's say about 31 to about 33. So that's about $2 versus 70 cents. So that's a fantastic risk-reward ratio. And every full point here is worth $600. So if I got in roughly, let's say at 31, and we get out, let's just say very roughly 33, so 2 points, that's $1,200. It won't be that. It'll be, what, about, I don't know, like 150 less than that, but it'll still be fantastic. Okay, so I'm looking forward to tracking this, and I will post updates. Thank you very much for checking it out.